Hello, my name is Washboardjim. I'm the founder of the Sneaky Snake trading strategy, where I love talking about chart patterns, moving averages, and being in the now. And this is going to be an earnings watch list, what I'm going to be watching next week, and I'll be monitoring these every single day, looking for scalps and maybe a nice little swing trade if we can get a nice little dip. But I'm going to show you how I would chart up my earnings watch list and how to prepare for it. So let's get right at it. Again, I'm the Sneaky Snake trading strategy, where I talk about chart patterns, moving averages, and being in the now. So right now, I think we're in a correction mode. We've had a real good run. They've been wanting to pull back for a good 2 years. We had a small one and a real fast recovery. We've had a couple with real nice recoveries, and I think 3 is a charm. I'm going to turn out to be very bullish probably in the middle of September and keep trading and scalping until then, unless I find a real good knife that I want to jump into. But I think we're in denial. But some people have been in fear for a long time, ever since Trump's been in office. I haven't. I've been very bullish, but there's a certain time where greed has to stop and you have to take a little bit of profit. So this is the earnings watch list for this coming week. We got AMC right out of the gate, and we got Domino's Pizza. Monday evening, I don't see much on here. Then we got Halliburton before open, General Motors, 3M, and MSCI. After close on Tuesday, Alaska. And then Wednesday morning, GE. These are just ones that I'd watch. Tesla, definitely Wednesday evening is going to be could have a pullback and then maybe a nice run on Wednesday. So we got Tesla. Remember, don't take this with a grain of salt, but I think AMC might have a little bitty fun with that. And then around Wednesday, I think we'll start recovering a little bit into earnings. But we got Tesla, Alphabet, IBM, Texas Instruments, and I think that's about it. And we got NOK and Cliff, American Airlines. Thursday morning, Tractor Supply. Nothing in the evening. And then Friday we got Verizon, American Express. And that looks like it's there's just a couple on here that I really want to keep a close eye on. Tesla, Google, ServiceNow, IBM. So Wednesday is going to be the big day. And then AMC come Monday morning. I got a small investment in AMC from almost $1.25. I want to hold them forever and see what happens. But that was real cheap. And let's get at it. Let's do some charting. So I'm just going to stick this to the left over here so I can kind of keep an eye on my watch list. Whoop, wrong one. Where are you? There you are. So this is my watch list for next week. This is a weekly time frame, and I've been telling people in a correction mode there's 3 moving averages and maybe 4, but there's 3 major moving averages you want to watch on the weekly time frame for solid support, unless we're really in a correction mode. Netflix failed that. So we got right off the gate, we got AAL, which comes out on Tuesday evening. We had a double top. We had a pull back to the shoulder line. That didn't hold. Now we're pulling back to the 200 EMA, which could be a solid support for a trade to move back up. If that 200 doesn't hold on the weekly EMA, then you're going to come on down and drop down into the jungle right around 1363 off the 200 EMA, and I would consider that the third crow if it pulled back, and then you'd have 3 black crows. So if it doesn't bounce right here, this is AAL, off the 200 EMA at 1460, you might come down and hit the solid support for a good scalp and a day trade at 1360. So we got 1460 and 1360, and that's right off the 200 on the weekly. Then if I go to the daily, that right now you're at the 50 SMA on the daily, which a lot of institutional traders will use if they're looking for a sharp little pullback and maybe a bounce. So we're at a solid support right now at the 50 on the daily, and I mean that's real solid. That could bounce up to 1618 and hit the 21 EMA, which would be the shoulder line of this head and shoulders, right straight across for a resistance level, right around 16 bucks, right before you get to that 21 EMA. So we're definitely at a solid support, but if it dips on down and hits this 200 SMA on the daily, that's going to probably be a very strong buy. Intel this week. Intel's earnings are Thursday evening, and we've pulled back already to the 100. So I'm trying to tell you, I called this dip last time when we were down here at the bottom off the 100. So you've got the 100, the 100, the 100, the 100, and can we bounce again off the 100? If not, it could be a pretty good drop down to the gap. We have a gap trade. So you got to look at that gap. Now this is on the daily. Let's go to the weekly. This really looks good, but I can see a small little pullback. But we're oh yeah, I mean even on the we got a megaphone pattern right here. Use the bodies of the candle. Someone this weekend said, Jim, you know, I usually can't see the charts that you point out until you actually draw them out and point them out. And I'm using the bodies of the candle. Now, it's very important that you understand, use the bodies of the candle and use the wicks as confirmation. The trend lines lie on the body of the candle. And I do it in every single time frame. Use the bodies of the candle. A lot of people, Dad, how do you call that out? I'm using the bodies of the candle. The wicks are a gift. The bodies are secured and you're selling it in the heat of the moment. So this is called a megaphone expansion pattern for Intel on the weekly, and it's right at a support too off the 21. That's a pretty big dip if it pulls back. So if it does pull back, you want to set your alert right around 80 bucks. We've had a real strong run in the market. A lot of bears out there. They've been calling a pullback for 2 years. So they're finally getting their little wish, but we're at a solid support here at the 21 on the weekly. So we got to keep a close eye on Intel. And Intel's a Trump pump and dump. And then fine tune it with the 1 hour. See, this has been a good sell-off. 144 all the way down to 93. That's a $50 dip. I mean, that's impressive. That's 33%. Right? Pullbacks of 33%. I mean, we're getting close. So definitely want to watch that this week. Then we got NOK. We're going to go to the weekly. This is just showing you how I chart these up. Always go to the weekly. I've got a support at 897 for this pullback. It's had a real good run. Now what you can do on the weekly is set up your Fibonacci and take it to that last breakout. And that pulls right by support, pulls right back to that 897 area for a solid buy right around 908. So I want to set an alert. I'm going to raise that alert. Let me see here. Yeah, I want to leave it right here. Actually, I don't know what that 908 is. Oh, what's that? Now let's move this up above the 38.2% pullback on the Fibonacci. And on NOK, my alert's set for 939, and then I got my, I'll leave this chart like it is, and we'll see if we pull back to that 38% on that Fibonacci, which is about 62% pullback from the top. So we're down 62%. AMC, this is a pump and dump. Now, you know, I like it when it's cheap. And there's some serial, and when I mean serial, like killers, there's serial people that just watch AMC. And I think AMC sucks. Same as Hollywood. So we'll go to the yearly. The weekly couldn't tell me much. So I jumped in this trade down at $1, and I alerted a lot of people. You could have had a nice little trade on this here trade. Now we're pulling back to a solid support inside the jungle of these moving averages. And again, you got the 50 SMA on the weekly, and you got the 200 right here. So we're at a close area for scalping. 186, solid support to stay bullish off the 50. And then I'm going to set an alert right above the 200, right off the 63 at 184 on the weekly. Now this earnings come out Monday. So if you get a bounce, you got a head and shoulders and a triple top. Let's do this here first. Resistance of about 218 to break. If you can break the 218, we'll start to move higher. But that's going to be your solid. We could move it up just a little bit. I'm going to move it up to the body of this first soldier. These are three white soldiers. So I want to create an alert right on the bottom of that soldier. If it breaks out, then I'll know. At or above on the mark. That's AMC, but you know, it's getting to the point where it needs a good little run, but like I said, Hollywood sucks. And I've been on this guy for 3 years of pumping this stock every single frickin' week. And he started pumping it at $6, $7, and it went down to $1. And he pumps it every single week. Oh, this is going to happen. This is going to happen. This is going to happen. Well, they're too far in debt, and Hollywood sucks. Tesla. Tesla's one of my main traders, made me most of my money. I've kind of relaxed on it here lately. We're definitely, let's get rid of this. So we've got a head and shoulders. We've got a triple bottom. You're going to take, and again, use the bodies of the candle. It's really hard to teach people that because they've been so instructed to use the wicks. But you get more consistency with the body of the candlestick. Body, confirmation, wick. Body, confirmation, wick. So we got a head and shoulders right now. Inverse head and shoulders using the bodies. So if that holds up, you could probably run it back up. And each one of these moving averages has a purpose, a general purpose. So if you keep watching my videos, and they're usually mostly short, I give you individual ideas on how to use each moving average and what to expect out of them. Inverse head and shoulders up to the 200 out of the trade. But you've got a wall of resistance right here. A wall of resistance and a gap. So you want to put a price line of resistance to break at that wall of resistance. Resistance, 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 wick, 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 wick. So right around 393.03. So your strong support down at the triple bottom. Set your alert. And I got a little alert window. No, not that. That's my watch list. Where are you? You got a little alert window right here that pops these alerts up, and I can read them. Ding, ding, and I'll go right straight to them and look at them. So we got an inverse head and shoulders and a triple bottom. So we're getting close to support. Now I'm going to move this alert to the body of this candle right here, of that spinning top. Just right above it, right in there. 375.36 back to 393.01. And that'll be a wall of resistance. That's a descending triangle. So that's Tesla. Now I'm very bullish on Tesla. Anybody that trades Tesla only trades Tesla on the fact that Elon Musk is one of the best CEOs ever. Let me repeat, ever. Jack Ma once said, "You have a strong business by the company that you keep, or you have great character by the company that you keep." So he's got a good, smart people that are working under him. So I don't worry about Elon one bit. I love the guy. He's one of my favorite CEOs of all time. So we get 375.36, unless we hold this shoulder line and start running up, and then target will be the bottom of this candle at 391 to 393 for the exit idea, unless it breaks out, has another run up to 430 long in this trade. And then you can take and just run an alert line on the body of that candle. That's it. No, we got more. We got Google. Google's on fire. Now let's go to the weekly. We've had some good corrections on these stocks already. So Google pulled back to the previous resistance. That's the first thing I noticed. Let's get this out of here. That's that shoulder line of that head and shoulder breakout. So you want to go ahead and put your trend line on this previous high using the body of the candle. You want to become an accurate trader? Start looking at charts at the bodies of the candle. There's your head and shoulders breakout. We're going to color this in. Then you got another support right down here below that at 303. This is Google. I'd like to keep this thing above 303. So we're going to put a price line off the 50 SMA on the weekly. That's your low support at 305.61. I keep my charts real clean, and I use my moving averages as support and resistance levels. Every single video I do talks about chart patterns, moving averages, and being in the now. You got to be in the now. 22 years experience. Someone come up to me this weekend and said, I'll take experience over indicators any single day. I've been here. I've seen things a whole lot worse than what they are right now. A whole lot worse. So on the daily, we're at the 200. We've touched the top of this resistance. Then you got, on the daily, you got another support right here, and that matches up with the 100. So we've already had the pullback, we've had the head and shoulders, and now we've had a triple top. So it'd be nice to have it adjust, come back and retest this right shoulder one more time, right there, and be a strong buy at 354. If it decides to break out of the 50 SMA, then it moves on up. But this is a triple top. Triple tops are bearish. Have it retrace and then have it come up for the fourth time. If you can count to 4, you might make a little bit more. If you can count to 3, you can trade with me. So we've got the 50 SMA. I'm going to set an alert at that triple top breakout. So if it does come up, I can be ready for it. Mark at or above, and then set an alert on the bottom of this shadow box. Actually, I mean, I really want it to hold here off the 100. I mean, I really do. So I'm going to set an alert right there. The 100 EMA, the 200 EMA, and the 200 SMA are solid reversals in most cases. But we've had such a run, you got to be in the now. I got friends that I've traded with for years. They don't look at the yearly chart and say, damn, man, we've had one heck of a run. We pulled back to the 200 here, and this is when I called out the reversal. Nobody believed me. Everybody was so much in fear. And I gave a huge speech 3 months ago about fear. The only thing you have to fear is fear itself. And they were all falling in the fear trap. And I was screaming, man, this is a signal to buy this stock. And this thing comes back to the 200. I'm loading the boat. And that's the bottom of my channel. Now we go to the weekly. Beautiful setup. I mean, this is really nice. Clean. I would have took that trade. Pulls back to the third soldier right here. You got 3 white soldiers with a tweezer bottom. Pulls right back to the previous resistance. Oh yeah, that's a no-brainer. So Google is very bullish. It's also way overbought. You know, knives are starting to come in handy right now. Then we got now. Here's another huge pump from $107 all the way to $239. Now we're back at support, and I've got this here, so I'm going to go back a few years. I got solid support here, but we didn't hit it. We bounced up, pulled back. We got inverse head and shoulders. Has to break the 21. I'm trading a watch list of resistance to break. And then support will be the bottom part of this here head and shoulders. So I'll move this up to the shoulder line. We hit it once. There's your head and shoulders right here. All you got to do is learn chart patterns. Take the time. I mean, it won't take a month. And let me show you the key chart patterns to learn. Copy and paste this. This is my cheat sheet. I already have them all memorized. We have continuation to the downside, continuation to the upside, reversals to the downside, and reversals to the upside. Those are the only charts, 16 charts you need to learn to make a ton of money. Copy and paste it. So there's your head and shoulders, inverse head and shoulders. And we touch right back to that right shoulder line the second time, and boom. That's the key, second touch on that right shoulder. And then we got another head and shoulders right here. So that thing could pull back. Now, this is a pump. This is a Wall Street fat cat pump. So you got a head and shoulders right here, inverse, using the bodies. With an alert right on the body of that candle right there. Oh, wow. That erased. I wasn't supposed to do that. Fuck. Let me put the alert first. So close to that trend line. There it is. So I got an alert set for the double bottom. I got an alert set for the right shoulder to touch. And then resistance to break will be the head and shoulders. Set my alert for resistance to break. Mark at or above. Okay, so solid buy at 82.50. First support 93.25. Resistance to break 108.86. Now, and then we got IBM. IBM had some bad news, and we're right at the solid support on a right at the 200 EMA. I mean, this SMA, this is what I've been, if you would have saw that on the weekly, Friday, you could have probably had a scalp. Here it is right here. Friday. So I'm one of the best knife catchers out there. One of the best. And I will say it over and over again. So we've got a knife right here. First you want to draw in the knife. We had one right here, fallen wedge, and a little 3 white soldier bounced to the 63. So you take up your trend line, start from the body of that candle to the body of that candle right there, that breakout. There's your snake. You're leading out with 3 white soldiers. You're leading out with 3 white soldiers. You got 3 black crows with 3 white soldiers. I never tell anybody to take the trade right when it breaks out of the channel. Wait for the pullback. Then we had a hammer right to the previous resistance. And that's when you take the trade. That's a bullish candlestick. Then it runs up and hits the 50 and the 63, and you're out of the trade. Snake, breakout, pull back, boom. Then you got another one right here with a triple bottom. Snake, 1, 2, 3, triple bottom, boom. Look on that calendar. Triple bottom, bullish. Triple top, bearish. So you had a triple bottom to a double top, out of the trade. It's real simple. 3 black crows, 3 white soldiers, pull back, boom. 3 black crows, 3 white soldiers, out of the trade. Learn the candlestick patterns. So IBM, it had some bad news. So we need to let it consolidate, give it the 3-day rule, and see what happens Wednesday morning if you get a pullback, and I'd probably buy the dip. And then the last one, MSCI. I took a little extra time on this because I think it's very important about my trading strategy and how to use it. And if you watch my videos, you can see that I like to trade squeezes, and I'm always looking for the best entry as possible. And if you take time out and study your chart patterns and your moving averages and be in the now. Now these idiots have a price target of Jeffries at a buy with 760 price target. I want to be in the now. I want to look at the headlines. I'm just a headline reader. They adjust price target to 746 to 704 and announce consultation of potential changes in the global industry. I don't know what the heck that means, but they're definitely pumping the stock. Let's look at the weekly and tell you if this thing's overbought. So here we go again. This is important. I mean, you want to get into a good trade and learn how to swing? Do you really want to do that? I've been saying this for 3 or 4 months to wait for the 200, the 100 EMA, the 200 EMA, and the 200 SMA for solid buys in a market correction. 200 EMA, 200 EMA, 200 SMA, 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 200 SMA. Those are all solid buys. I mean, you really want to make a lot of money and you don't want to trade much, just look at the 200 EMAs, SMA, and the 100 and see if you're at a support level. This was a strong buy. Strong buy, 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 strong buy. We're at a resistance. I don't trade resistance levels. I know traders that trade, but they'll only trade the breakouts. And you know how You know how often that happens? If it's a triple top or a rising wedge or a bearish candlestick pattern. So we've resistance. The wicks are confirmation, and the bodies are the real thing. So I'm not going to jump in the trade at a resistance level. I want to wait for the previous resistance, right at 609. I'll take that body of that previous resistance, and that's connected to an inverse head and shoulders. We've got wick, body, confirmations of bodies, body, wick, body. So, yeah. Always been a good buy on a pullback, but you got to let it do its thing, and then always set your alerts off that 200 or even the 100 EMA. But that's when you want to swing, when you're looking at the weekly and you seeing these touching the 200 EMA or the SMA or the 100. That's when you really want to pay attention. I made tons of money by waiting for those signals. Here's the daily. We got the 200, the 200, the 200, resistance, support, resistance, support, resistance, support. A little overdone. But this one, I think, is a controversial stock anyway. But they got price target 760. The pumpers are pumping it. Go back 3 years. Go back 5 years. It just seems like it's way overbought, but we're definitely at a resistance level. Here on the weekly, resistance. So the next support on this would be right around here for a strong buy. Because there's so many. I got my alert set for that spot right there. Then the resistance to break, just in case I want to trade the breakout. And then when I trade a breakout, I'll wait for the pullback. Like if it breaks out, I'll wait for it to pull back and retest that previous resistance. Is what I'll do, and then I'll jump in the trade. So that's a little bit of this coming week's earnings. You know, copy and paste chart patterns. Be in the now, in the market. Keep looking at this map. And let that be your guidance to get into the stock. I usually buy in at capitulation, start averaging in, and then sell at optimism. When everybody gets excited, I'm getting out of the stock. And I'll wait again for the next pullback, and I'll scalp it up and day trade it. And that's it. This is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. And I'm Washboardjim. Have a great weekend.